Good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. All right, everybody should be able to see my monitor now. For those of you new to the trading room, welcome. What you're looking at here is the diversified trading system. And I'll just give you a real quick overview. It's diversified because we're looking at the market from three different points of view. So here in the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the newest DTS bird. This is called the Raptor. It's actually a hybrid. It's a blending of the other three tools all into one. The charts you're seeing here are the NASDAQ. I'm also following soybeans and crude oil on my other monitor, but I would be happy to take a look at any market which is of interest to you. So if there's something you'd like to see, please don't be shy. All right, let's take a look at what's been going on in the overnight. We'll take a look here at the Eagle. So where did we leave off yesterday? The market closed, wow, a pretty strong Asian session. The market closed right about here. And another strong Asian session. We saw this yesterday also. So a big run up through the Asian session. You can see we've produced several good signals. This nice little red bar buy off of the hard edge, very reliable signal. Market floundered a little bit here. One more push and a little bit of sideways action as going into the London Open. And then we got the reversal, at least for a little bit. A lot more activity in the Euro session, a lot of choppiness, and then the market opens over there. So all this right here is going to look like a great big opening gap to traders this morning. It'll be interesting to see what they want to do with that. Okay, we're going to give them a few minutes to settle in. I'm just going to shoot a trend line across here for a little bit of a reference. We'll keep an eye on this. Kevin's asking to see crude oil. Absolutely. We can take a look at crude oil for you. Today, crude inventory, of course. So we'll start with crude here on the Eagle. And it looks like the overnight, a fairly decent move through the overnight. And here too, we can shoot a trend line across the lows. We're coming into the hard edge where we normally anticipate some sort of reaction. A lot of times what we'll see on Wednesdays is crude oil move a little bit sideways. And that will enable us to bracket the highs and the lows and perhaps trade a breakout going into the inventory report. There we go. That's probably a little bit more accurate trend line. So right now, crude oil falling off, I would suspect is going to find support somewhere around 45.50. Perhaps come in with a little bit of a buy signal, perhaps another red bar buy. We'll take a look here at crude on the Falcon. That's the Falcon Swing Trader. That's this one right here. And we're sitting right on our primary resistance line. These lines that you see here that I happen to have on the Falcon, this is an add-on. This is from the Ultimate Support and Resistance Suite, and I'll get you the link for some of these add-on tools if you'd like more information about them. The Ultimate Support and Resistance Suite Forecast the support and resistance lines for the next day. And they are not Fibonacci levels, they are not floor pivots, they're better. Sorry, just blowing my own horn there. So it looks like we took a bounce off of the median line, found a little bit of support here off the primary resistance, and now we're right back here again. So again, this whole neighborhood where we might anticipate a little bit of a reaction. What I would be looking for here, we're working on a possible trend change signal in crude oil, but before that happens, we need to see a test of the extreme, right? We need to see the prices test the highs, turn over, and then we'll have a better idea which way this market is prepared to go. So at the moment, they're still searching for some buying support. And once we know where the buyers are, well, it'll make it that much easier to sell. And last but not least, we'll take a look here at crude oil on the hawk. And we're actually getting a first micro-macro cross signal. Now, this is a very reliable signal in the hawk scalper. The problem I'm having with this one, though, is that we don't have a test of the extreme yet. So while I would take a look at entering the signal, oh, by the way, before I get too far ahead of myself, all the signals print the same way. We get a warning dot and an audio alert that tells us that the signal parameters are starting to build. And then when all the signal parameters are met, we get a triangle and a hash mark. So according to the hawk, the scalper, it looks like crude oil is going to be heading a little bit lower. The problem is we might get that test of the extreme before we get to our profit target. So ideally, I'd want to cover it way up there, but of course this is crude oil and I can't afford to do that. The trade manager here is going to protect me and keep me from risking more than I can afford. Could I risk it back here to the macro line? Nope, that's out of reach too. All right, what if we did it halfways? Well, that we could do. There's a little short-term scalp. And it looks as though, I don't know, we might just get that before we see a little bit of a reversal. Look where the profit target is, right around that 45.50 area that we were anticipating to be a support zone. All right, so there's crude oil. Oh, the Raptor, 1 second here, let me get crude oil put on the Raptor. And then we'll take a look at that. Okay, Zaman is asking for the E-mini. I knew there'd be at least one E-mini trader in here, so we'll look at the Raptor while the E-mini charts are loading. So this is the Raptor for crude oil. And you can see we're starting to turn over here also. Still don't have that test of the extreme. It's very unlikely this market is going to run straight down here without giving us some sort of retest. So I'm doing my best not to panic just yet. I think crude is going to wedge up here a little bit before we get into the inventory report. So I wouldn't be surprised to see it trading right here around 45.90 in about an hour from now. We'll see. Okay, this tool here is the Geiger counter. I'll be telling you a little bit more about that one also. So let's just get this out of the way and we'll take a look at the E-mini. And then we'll see whether or not we're getting any opportunities here in the NASDAQ yet. Had a little bit of a scalp here with the macro pullback signal. All right, here's the E-mini. We'll start with the Eagle. Oh, these blue dots, by the way, these are our stop strategy, that our trade manager tool, that's this tool here in the margin. We've got 16 different stop strategies to choose from. Okay, so what have we got going on here in the E-mini? It looks like we might be working on a trend change here also. The market's come down. We got a red bar buy. We know this tends to be a pretty reliable signal, so it's very likely we're going to see the E-mini rally a little bit here still. But if this fails, then we're going to start working on a rule of three signal, which is our counter trend signal. I think a lot of people are bearish on the stock indices, especially given what's been going on the last few days, where we've seen some pretty dramatic declines. Here is the E-mini now on the Falcon swing trader, and you can see we just took a bounce off of the median line from the ultimate support and resistance suite. No real, I was going to say no real defined trend. The overnight, of course, going up into the open, and then the market open, and we're kind of bouncing around a little bit. See, we took an early little reaction here to the primary support, flinched a little bit early. Working on a trend change signal now to the downside. We don't have the signal yet. Remember, we need the warning dots, the triangle, and the hash mark. But if it drifts any lower here, we're going to be printing those. And now for the hawk. This is the E-mini now on the hawk scalper. And we're starting to print some yellow bars. 1, 2, 3. We only have 2. If this was going to turn into a 4-arrow consolidation, that's one of the high probability patterns that we look for. Nice little first micro-macro cross right here. That just came right out of the open. So you see you get the warning dot, triangle hash mark. The first micro-macro cross is when the micro line, that's the thin one, crosses the macro line. Now everything comes into sync. So we got red lines, red bars, red signal, red filter. That's a high probability signal. And you could probably set it up like so, and voila, low scalp. Okay, these yellow bars are very neutral though, so we'll see what comes of that. Okay, we'll put that back on the shelf for now. Oh, okay, I see I missed a little, that same first micro-macro cross here in the NASDAQ. That had very nice follow through to it also. Nice thing about the NASDAQ, of course, versus the E-mini is it's only $5 a tick. So whereas in the E-mini you may only be able to take one contract for your account, in the NASDAQ, say I could take at least 2. Maybe put a runner on one. It looks like we're getting some decent ranges. Maybe I'll set it up so we're going to take a runner today on part of our position. All right, so we'll hold out for a macro pullback signal here. That'll be one of our higher probability signals. And while we're waiting, I'll show you the Geiger counter. That's this tool right here. This is essentially a tape reader, the Geiger counter. It gives you a visual of the time and sales. And what we look for is we look for these islands of activity. They show us sometimes the stop running. Currently the market, at least according to the Geiger counter, is a little bit more neutral, fairly evenly balanced between the buyers and sellers. And now you see the sellers taking an upper hand as the needle goes red, and there we go. We're getting a little bit more follow through. This was actually developed in response to one of the DTS owners. He was saying, how can I judge whether I should stay with a trade? You know, I'm in a trade. How do I know whether it's time to get out? And the Geiger counter sometimes gives you an early warning that perhaps market conditions are changing, giving you time to bring in your stops and maybe capture more profit. All right, so we'll see if we can't find a decent signal here this morning. It's already falling off considerably. Looks like they're going to try to get into that gap. Wow, the advanced decline totally flip-flopped today. Jim's shooting me the advanced decline numbers. 2,200 buyers, 500 sellers. That's the exact opposite of what we've been seeing the last few days. So we've got about a positive 1,600 on the advanced decline. Now, for those of you who like to follow things like advanced decline numbers, you keep in mind that they are relative, right? They tend to be relative to where they are during the day. It's not on the surface, yes, it's bullish, but if those advanced decline numbers start to go, say, from a positive 1,600 to a positive 1,200, well, then that's actually kind of bearish, not bullish. Oh, sorry about that. Had to mute out there for a second. I had a sneeze coming on. Yeah, like Jim says, yeah, it's bullish all right, but we've had a 100-point drop in the mini Dow. So you always need to temper that information with what's going on in the charts also. All right, we're seeing a little bit of activity here now near the lows. What time is it? Oh, it's about quarter to the hour. Generally speaking, my least favorite time of the day to take a trade. So we're back here now on the primary support. The very, very short-term trend out of the open is down. And the Falcon is almost making an early trend change signal. All right, well, I'll get to show you at least how the trade manager handles this. Oh, come back here. I'm going to take it above, come back here. All right, so we know the current limit of this bar. The trade manager automatically controls my risk exposure. I actually wanted to enter down here, but I got a little bit cute with my entries. Hopefully we'll see a little bit more follow through out of this. What I want to show you, however, is the stop strategy. So I'm going to loosen this up a little bit, the advanced decline, or pardon me, I got advanced decline on the brain now, the ATR. So we're going to enable our stops, and you're going to see the trade manager, as soon as I click accept here, it's going to pick up my stops, and now it's going to roll it according to the stop strategy. So did you see that? Just moved it up here with the blue dot. And there we go. So now we hit our break even trigger, snap that trade to break even. Oh, come on, don't flinch just yet. Give me a couple more ticks. There we go. Come on, here we'll give you a little bit of a push. Come on. They're going to tap me at break even. So it's my fault for getting into the trade a little bit late. We would have hit our high probability profit target had I taken the entry a little bit earlier here. The hash mark is our suggested entry point. And I was a little bit slow on the trigger. Come on, get up there. I'll give you another little bit of a push. No. Had I gotten in where I intended, you can see we would have hit our high probability target, so my fault. But what made this one appealing, this was our early trend change signal, and the early trend change signal develops just as the trend line starts to turn over. You see everything comes into sync. We always want to be trading in the same direction as our trend line. So if our trend line is red, we're going to be sellers. If the trend line is green, we're going to look for buying opportunities. So the trend line goes from red to green, and we generate a buy signal. You can see green bars, green buy signal, green filter, everything is in sync. The early trend change signal, always a little bit more ambitious, but what made this one more appealing was we had our test of the extreme, right? We had our test of the extreme showing us that the buyers were in control. Therefore, even if you wanted to take it above the little swing high here, ideally you want to cover below the low, and away you go. You hit your profit target. Except if you got in a little bit late. I could have held the break even off, but whatever. We'll get another chance. So now this looks like a late filter entry signal is building. The late filter entry signal, another very reliable signal. It occurs, well, here's one right here. When the filter goes out of sync and comes back into sync, and the whole time the trend line does not change color. Very reliable signal. I think I'm going to shoot a trend line across the highs here. Just to give us a little reference. So let's see if we can get that late filter entry signal. We might take another stab at this one. Yeah. All right. It doesn't want to. Hey, we're really getting a mixed bag here this morning. Wow. All right, so things are looking bullish. Here is a green bar sell. Oh, now this one's going to run away on me also. Oops. Let's set this up so you can see what it's supposed to look like. Here's a green bar sell signal. This tends to be a fairly high probability signal for us on the Eagle. We're currently against the ATR, which we'll use as a filter. So the next bar flips the ATR over. That now becomes our signal bar. Can I cover this up there? No. So I'd have to cover at least above this swing high. I'd probably take it up to there. Is this little area here going to give me a little grief? Maybe. You see how this is looking, is it's starting to shape up a little bit like a great big bear flag, right? Where we get this little pullback region, and then we get the market perhaps heading lower on a breakout. But they're still bouncing around a bit. If they continue to hold these highs, we should come back with another green bar sell, so there should be another opportunity there. The Raptor a little mixed at the moment. We'll see if it comes back into this cloud crossover right here. That should give us some support. And it may even come out of there with a buy signal. All right, so oops, I'm a little bit slow here this morning. So another green bar sell opportunity. On the Eagle. Oh, come back here now. Oh, you stinkers. Just as I'm setting up, they run away from me. All right, well, the green bar sell, the signal actually produced right back here. I may have delayed it to allow for this little trend line here, but let's say we took it off the signal bar. We could cover up there. We're about halfway to our profit target. If we get a reaction here, we should still come back with a hard edge bounce signal. So all is not lost. I'm not liking these peaks here. That's showing me a lack of follow through. And it's making it extremely difficult to cover the trade. So here we have a first micro macro cross signal. Ideally, I should cover it way up there. Here now is our first micro macro cross doing a little bit of a retreat. So that might give me a chance. This is a little bit of a risky one, folks. The market's not quite responding the way we would like to see it. Okay, now we're into yellow bars, so that nixes that. Possible green bar sell, so there's one more chance here to short. After that, the market is very much in a sideways pattern. This is back into yellow bars. Okay, so we can cancel that. The E-mini, no better. Here's the E-mini on the hawk. These yellow bars show you neutrality. So when you get yellow bars, a lot of these yellow bar clusters on your hawk scalper, that's telling you you've got a market that's starting to move sideways, starting to drift. You can see our filter is all broken up. People always ask me, how do you trade a choppy market? Well, the best way to trade it is to stand aside. I know that's not what people want to hear, but really you're asking for it. All right, here's this hard edge bounce. This current bar, if it finishes, will flip the ATR over. So this will essentially become our signal bar. Did they slip me a tick? Stinkers, I think they did. All right, so a little bit of a Hail Mary type trade. Not the strongest setup that we've been seeing, but the sellers are currently in control of the market. Obviously, they need to take out these lows here. Yeah, Tony's reminding me about the oil report. I believe that's at the bottom of the hour. So we got a little time. Look at this bar, how active it's starting to get. This is a real tug-of-war bar. If the sellers win this bar, then we should get a little bit of a move to the downside. Uh, nope, it's not going to play nice. We're getting a comparable signal on the E-mini for you E-mini traders. Here's E-mini on the Falcon, or the Eagle. This one hasn't tripped just yet, but the green bar sell off of the hard edge. So you could set up to short it like so. And hopefully there'll be a little bit more follow through if this breaks down. But the problem is the buyers are not letting it go. All right, so last chance for the sellers now. They got to dig in and show me that they're serious, or the buyers are going to run it. Come on, get down there. Come on, come on. Let's see what's going on in the other tools here. Yeah, we're kind of right in the middle of our daily range. Took a little bit of a hop there off of the primary. Oh yeah, here they go. All right, so we're getting some buying opportunities here also. We're starting to produce a first micro macro cross signal. So we could set up for the buy side. But let me just get back to this one here. Let's see if we get a chance to manage this a little bit better. All right, so remember this bar down here that was getting all excited? Well, we're getting the same thing going on here. So we know there's active buying right down here. We know there's active selling right up here. See how fidgety this bar is? That's the nice thing about these mean Renko bars. It becomes the whole supply and demand thing. It becomes much easier to see. All right, so now the sellers have shown me, at least for one bar, that this is where they're prepared to dig in. I could become a little bit more aggressive with my stop strategy now, especially since I think I'm on the wrong side of this trade. So I'm going to go with the bar high-low. I'm only going to give them this one bar. This is the last chance for the sellers. If they can't put it together from here, the buyers are definitely going to run the market a little bit higher. So I may as well roll my stop a little bit more aggressively. Come on. Hey, they're just being difficult. Come on. So the closer we get here to our entry, this whole 41.85, 86 area, we're going to see the buyers try to dig in one more time. The sellers, if they can force it below 41.85, you're going to see the buyers start to vacate their positions, and that would send the market down rather quickly. buyers are starting to recover. All right, so now it's in the seller's hands. What I'm going to do is I'm going to give them just that one more bar. Oops. All right, so the buyer's a little bit stronger, so it was definitely time for us to exit. And you just saw something that you'll never see in any other trading room, a room moderator actually admitting to taking a loss, taking a losing trade. But that's the beauty of the trade manager, is that by containing my risk to a certain percentage of my trading capital, I didn't lose any more than I could afford. So there's a little bit of comfort in that even though the signal did not work out, and it wasn't as strong a signal as we would normally anticipate, even so the loss is not one that I cannot afford. That's where you run into problems, is when you start incurring losses that you can't afford. If anybody hasn't enlightened you to this yet, if you're trading, you will take losses. Ed Sequoia, the famous trader, one of the best traders of modern times, I like his quote. He says, if you don't want to get whipsawed, stop trading. And that's exactly it. All right, well, crude's starting to wedge up a little bit going into the inventory. I'll bring the crude chart over in just a little while. Okay, we're getting a couple of buy signals now. We had another first micro macro cross signal here on the hawk. Another one over here. You can see in both instances we have to cover the market a little bit deeper. Here our day ranger. This is also an add-on tool. Look at these ranges. The 30-day average 350. The 10-day average 560. Isn't that crazy? The 5-day average 360. Yesterday's range was 440, and today we're just under 200. So we've got to leave our stops a little bit further back, give ourselves a chance. Okay, Zaman asks, hi, I'm using the same mean Renko bars. What brick size do you use and what setting on the super trend indicator? Well, for the Hawk Scalper, for 90% of the markets, we recommend a 6-tick brick. For the Falcon Swing Trader, an 8-tick. For the Eagle Trend Trader, a 12-tick. And on the Raptor, we also recommend an 8-tick. The Super Trend, and we're working on a possible late filter entry signal here. I like, well, first off, what I do, people get all worried about having the optimal setting for their stop strategies. And really, you can adjust your stop strategy as the trade goes on, just how you saw me do. I initially left a very wide stop, and then I started to adjust it a little bit as the market conditions changed. So what I do is when I turn on the stop, if it looks like it's following the market reasonably well, I'll just go with those settings. If it seems like perhaps it's a little bit too tight, well then I'll expand the settings a little bit. If I feel that's too loose, well, then I'll make them a little bit tighter, right? So long as it's generally following the market okay, I'll go with it because I'm probably going to adjust the stops when the trade is underway. So for instance, well, let's say here out of the open, we took the early trend change signal lower. And let's say we set it up like that, and we had two contracts, and let's say we're going to set, I'm not setting it up right now, but let's say we set it up so we take profit on one at target, and we're going to run the other. Okay, so we get way down here. Now all of a sudden the market starts reacting a little bit. We're getting way down here. I've got all this open profit here, and I'm probably sitting at $300, $350 in open profit. I'm not going to give up half of that with a wide stop. So at this stage, I'm probably going to look at something like parabolics, bring in the parabolics, which tend to tighten up as soon as the market starts to reverse, or maybe the bar high low, which will be, one or two bars back. And I'll let the trade progress with a more aggressive stop strategy. That way, when it finally reverses and stops me out, as it would have done over here, I've maximized my profitability. If I was still with the super trend, my stops would be back here. Sure, I'd still be riding it out, but I would eventually get stopped, and I would have given up another, I don't know what that is, probably 80, 90, maybe $100 in open profit that I could have banked. So that's the way I do it. I'll start with a stop that's perhaps a little bit more generous to begin with, just to give the market a little bit of wiggle room. And then I'll get more aggressive as the trade goes on. For those of you who have used parabolics before, you'll know that's the whole notion behind parabolics, is they've been designed to be very loose as the trade starts, and then as the market starts to tighten up, well, then they become more aggressive. And you can see they'll get in there very tight. This trade back here that we were looking at, look at how long the parabolics hang back. The market is at our profit objective already. Parabolics are not even at break even yet. And they're still, far, far away. But then as soon as the market starts to back up on itself a little bit, show some signs of weakness, well, the parabolics, look how quickly they get in there. So they're a very good strategy in that respect. And I try to do a similar thing with my trades. I try to give the initial trade a little bit of room to work. And if it doesn't want to work out, well, I'll try to adjust the stops as the trade goes on. So still lots of choppy sideways trading here at the moment. And are we getting close enough to our crude inventory? Yes, we are. So here's the Falcon now for crude oil. And you can see we've made some fairly decent ranges. It looks like this support area around 45.10 is going to be significant. And it looks like 46 is going to be an important number to the upside, currently skewered by our primary resistance line. And what I would consider doing here is using an OCO order and bracketing this trade so that we sell below the bottom of the range, buy above the top. And here too, I would go with a very conservative stop strategy, maybe something like the chandelier, or maybe I'll really wind back the ATR, because this is just going to be a safety net for me. Right? This is only here to keep me from blowing the account up. And crude, as we all know, can be a very volatile market. For the E-mini, Zaman is asking what brick size is for the E-mini. The E-mini is actually the market which is the exception to the rule. Markets that trade at 12.50 a tick, we recommend a 4, 4, and 6 setting. So a 4-tick Hawk, 4-tick Falcon, 6-tick Eagle. I'm not quite sure what the NASDAQ is waiting on. We're getting a mixed bag of signals here also. Possible late filter entry signal here with the NQ on the Falcon. So the trend line has not changed color. Everything else has. Ideally, I'd want to enter above this high. The problem is I've got to give up about a half a dozen ticks just to gain entry. And they're starting to turn over, so they'll remove all temptation for me to do that. Possible early trend change signal on that one. Yeah, like Jim says, it's a chop fest today. That's exactly right. Yeah, Mark remembers. If you ever need an easy way to remember the settings for your E-mini, the 446 settings, that's the telephone prefix for Moose Jaw, Saskatchewan. There you go. Now you'll never forget. And yes, there. For those of you who have never heard of it, yes, there is a place called Moose Jaw, Saskatchewan. Oh, here they go again. Okay, we're getting a rule of 3 type setup here. Doggone it, I don't like the way they're chopping around here. Okay, well, the rule of 3, I can always use it as an early warning, right? I don't have to take the counter trend signal. It's setting up so nicely, though. Well, we'll see. Maybe I can get a second push off of one of these bars. I suppose I could take the entry below there, but once again, I'm giving up a whole lot of my open or potential profit just to gain entry. All right, that's a little better. We got a bar now that's giving us a second push, and all a second push is that the bar shows us its current limit, and we get the sellers going or the buyers going against it, and then we try to enter on some renewed momentum to the downside. So the buyer's trying to fight it up a little bit here. Come on, almost to our break-even trigger. There we go. So we got our break-even. And I've enabled our stop strategy, so if the market continues a little bit lower here, actually what we could do, why don't we try to run this one? We'll see if we can't take this one below the lows here. We're going to see a major reaction down at these lows, and we would have just hit our profit target, but we're in the demo room here. Let's have a little bit of fun, see if we can't run this trade out a little bit. Zaman was asking about the stop strategy. So you see currently we're with the ATR, and as the stops, as I suspect the market might start to react or become too volatile, I'll get my parabolics ready. Well, in fact, I can probably go with parabolics right now. So we'll enable the parabolics. And this reaction to the lows should be anticipated. So we need to stay, if we're going to attempt to ride this swing out, we need to stay far enough back that, well, the buyers and sellers have a chance to sort themselves out. Ideally, what I would like to see here is a little bit of a poke through the downside, then we're going to get that reaction. So if I can get the market, say, down to here somewhere, then that would be a great little profit opportunity. Let's take a look at the support and resistance suite and find out where that next line is. So next support line, 41.6263, in that neighborhood. So that would make a outstanding profit target. In fact, I won't even be that greedy if we can ride out this swing. So 41, I'll take 41.65. The thing is, too, with these tools, with our high probability profit targets, once we hit those high probability targets, it's not unusual to see the market make some sort of reaction. Just keeping an eye on the clock, too, for the crude inventory. Okay, come on down. There we go. Let's go. You can do it. They're still hesitating a little bit. Wow, huge tick spike. Jim says the ticks fell to a negative 1200. That should have some follow through here. Come on. Zaman's asking about the ultimate support and resistance suite. Will it work on TradeStation? Unfortunately, no. Not yet, anyways. The problem is the programming, the software itself. I'm not knocking TradeStation or MetaTrader or any of those other trading platforms, but NinjaTrader is the only programming that is robust enough to handle this software, which is why all this has been developed for NinjaTrader. We've had the programmers try to do it for TradeStation and MetaTrader, and they just can't. It crashes the software. These tools that you see here, these are the most powerful tools available to the retail trader, and I'm not just saying that. There is nothing else like this. These tools here allow you to trade just like the big boys on Wall Street trade. All right, well, a little bit of a hiccup there. They didn't drift quite as low as I anticipated, at least not yet, but that's all right. Nice little move. The rule of three scenario is when we get three signals against the band. Now this band that you see here, this gives us our directional bias. So when the soft edge is above the hard edge, we're looking to buy. However, we got 1, 2, 3 sell signals printing against the band. Plus we had our nice little test of the extreme here. Everything suggesting that perhaps the market was going to head lower. And then fortunately, we had that nice little second push opportunity, which allowed us to get in and watch that trade take off to the downside to retest the lows. All right, close enough. Time to get busy with crude oil here. We're going to watch this unfold for the next few minutes. You can see crude oil slipped a little bit lower. It amazes me sometimes how often the birds will actually pick up the direction of the report before the report is released. So right now, almost across the board, things are looking more bearish. So, but we'll see. So ideally, I want to see crude oil trading in the middle of this range. I'm going to take it still here above 46. And I would dearly love to see it up here around 45.50. In fact, what I think I'm going to do is I might use the median line. I could cover, actually, why don't we do this? We'll enter above the primary resistance and we'll sell below the median line. Oh, and we're getting a late filter entry to the short side also. Yeah, Zaman's asking about cross-platform, using these indicators on another platform. No, like I said, they won't work. The programmers have tried, but the software, we haven't figured out a way around crashing their software. It's not robust enough. Now, I'm no programmer, but I believe NinjaTrader is based on C++ or something like that. Anyways, the programming language actually enables us to run these very complex algorithms, especially this bad boy here, this trade manager. Okay, they're starting to even out a little bit. We got a couple minutes yet before the inventory report. All right. Oh, nicely done. Jim's long on the YM at 78 and out at 90. Well done, Jim. Good little move on a day like today. It's tough to get a handle on which way they really wanted to go. They started off more bullish and now they're definitely looking more bearish. Zaman is asking about, did you hear about Welcome Place in Mississauga, Canada? They seem to use all your indicators. No, we don't have any affiliation with them. But if they're using these indicators, they must be pretty smart. Okay, the inventory report should be hitting the floor any moment now. We got a late filter entry to the downside here. Yikes, it'd be so tempting just to go ahead and short it. But this is crude oil. I should mention another way to trade crude oil for those of you who haven't heard it before. A friend of mine who likes to trade crude will actually let the report hit the floor and kind of let the dust settle after about a minute or so, and then he'll bracket the range. So a quick little hop to the downside there. Settling on the median line. There we go. Let's see if there's some follow through on this now. Come on, get down there. Come on. See, had I sold that late filter entry, that would have been a nice little move. Decided to stick with the bracket trade. Working on a possible little trend change here to the upside. So if they fail at this point, it's going to be a good time to get out of Dodge. Okay, come on, crude. All these people that bought up crude on the last rally are now starting to scramble a little bit. Come on. Come on, take out that low. Okay, I'm going to go with the parabolics now, and if we get another couple bars here, I'm going to snap the trade to break even. Just get me a little bit lower. Come on, you can do it. You know you want to. There we go. All right, so I'm going to snap the trade to break even. I'll let parabolics take it from here on out. It never hurts to keep an eye on the dollar amount that's accumulating either. You know, I personally have a pain threshold around $500. Or if I see $500 in open profit, I'm just going to snap it. See, it showed me 500 there for a heartbeat. And of course, you can always set a profit-taking target. But again, we're in the demo room here, so we can play with this a little bit. Come on, get down there. Get going. This is the make it or break it bar that we got going on right now. So if this bar finishes higher, there they go. They're going to tag me here in a moment. Oh, well, that's all right. Oh, look at that slip. We had $280 and we got slipped. We got filled at 220. Oh, yeah. Welcome to trading crude oil. Yeehaw. All right. Well, that's all right. It's still a profitable trade. Nothing wrong with that. But, you know, like I pointed out to you, it's amazing. Here's crude oil on the Eagle. Going into the inventory report or before the inventory report, we have the sell signal, a hard edge bounce. Oops, this is the problem with crude. You need a lot of moolah to be trading crude. Why is that not letting me in? Okay, here, we'll just do it like this. We'll force it. Okay. And at the inventory release, we saw that little spike to the downside and then, you know, a subsequent move lower. But the DTS system saw it coming even before the inventory release. And it does that time and again. It actually is quite surprising, or at least to me. I guess it shouldn't be, but when you get a tool actually looking behind the scenes and giving you a very good indication of what the market is going to do before it does it. Yeah, like Tony says, a few months ago they would have locked you up if you said crude oil was going to be trading at $44 a barrel, or even below 40 a barrel. Oh my gosh, how low did it get? 38.20 or something like that? It was insane. Here in Canada, a lot of our economy is based on oil prices because oil is a major export. And needless to say, the economy is doing okay, but the exporters are loving it because the Canadian dollar is so cheap. But anybody who's trying to travel anywhere to the States or to Europe, forget about it. You're getting creamed. Zaman was asking about the support and resistance lines on the E-mini. Here you go. So it just took a bounce here off of the 1919 level, which was our secondary support line. And it looks like, look how well our primary support held the market up, broke down, tested it from the other side, gave us an early trend change signal. Omar, who trades the Forex markets with DTS, always likes to use these lines as profit targets, and I can see why. Now that we've broken the primary support, normally we anticipate the market to move two zones. So that would mean 1910 as a probable secondary target. That's a long ways down, I know, but that's how it's looking right now. Well, that crude report was a little bit more like the old crude, a little bit more exciting. Nicely done, Mark. Mark says I managed to make $750 on that oil trade with 2 contracts. Nicely done. Didn't develop an ulcer when the market unloaded, when the inventory report came out? Some of the most wicked moves I've ever seen in trading have all come in crude oil. That's excellent, though. Mark says he's got his antacids right by his side. All right, so just trying to get a handle on things. We're getting a first micro macro cross signal here. It certainly is buyable because it's just a scalp. You know, you could get in and out, already hit our high probability target, so no problem there. The problem is the trend. See, the market is definitely moving lower, and I think people are comfortable selling it. And this current little rally, you know, once again starts to look a little bit like maybe it's just a great big bear flag, and we're going to see a breakdown. So I have to say I'm a little reluctant on the buy side. I'm not convinced yet that the buyers have control. Macro pullback signal here, but the yellow bars are spoiling it, and now we're into a red bar buy. So this one can quite literally go either way from here. Red bar buy, of course, being our counter trend signal. We can buy it up like that, or we can trade the failure of it. Signal's not complete yet, so don't get too excited. We just have the warning dot at the moment. But that's how things are starting to shape up. Yesterday, at least the direction seemed a little bit more obvious. Today is one of these transition days. And here I'll pull up a daily chart. It will make everything a little bit more clear for you. Let me just build you a daily NASDAQ. Oh, where'd you go? Okay, so here's the NASDAQ on a daily chart. Everybody knows we had that big meltdown there the other day, and then the buyers came back, and now the sellers are coming back. So this, where we're at right now, major conflict zone. Buyers want to rally the market. In fact, you can see these long tails on here. Yesterday's session had a little bit of a tail to it. Sellers obviously in control still. Got a nice little breakdown and a retest. So the breakdown, the retest, sellers trying to force the market down. So we got a lot of things going on right now. That's why we're getting so much choppiness in this particular chart or in this particular session. Because if the buyers take control here, well then we're going to see them try to run the stops. Not today, but maybe over the course of the week. And of course, if the buyers fail and they trade below the lows, well then it's free fall. 4,000 is a very probable target. So that's why we've got so much choppiness going on today. They're really trying to sort things out, and neither side is gaining control. Yeah, Jim's got the right idea. He just shorted the YM for another 15 ticks. I think that's the thing to do today. Just get in, grab some money, get out. Well done. Well done. For those of you not running Ninja, the nice thing about NinjaTrader, of course, is that it is free to use until you start trading with it. But if you're already having another trading platform, you can certainly use NinjaTrader in parallel. I do know traders who do that. They really like their MetaTrader or TradeStation or whatever it is they're using. And they'll actually use the DTS system to generate signals, and then they'll superimpose those signals onto their other trading platform. Okay, getting a little bit of sideways action going on now. More yellow bars. Getting a little bit of a trading range building. Not much point trying to do anything so long as they're within this range. We'll see if we get a reasonable signal. We might give it a poke, but right now they're content to go sideways. No point in chasing them around if they're just going to chop things about. Here the Raptors kind of identifying this whole sideways range also. What you could do is you could simply bracket that range and trade the market on a breakout higher or lower. Like I said, so long as it stays in there, it's probably pretty evenly balanced. Well, here we go. We're going to test the bottom end of the trading range. Now, when we get these breakouts out of these ranges, what we want to be on the lookout for is the test and the retest, right? So we're going to see them try to break out lower, and then perhaps give us that retest before the next leg down. We haven't done a Raptor trade yet, so let's see if we can put one together here. Oh, what I should show you here is on the, you probably noticed that this trade manager is slightly different than the other one that we were looking at. This is called the Trailblazer. The Trailblazer is essentially the same thing, but it doesn't have the risk management component to it. And the reason for that is we've had owners ask for a faster entry system. And the solution was to go with a one-click entry system. So what this does is, let's say I have my stops enabled. We don't have a sell signal here just yet, but I'm just going to show you how this works. If I sell the market, I automatically get my stops. I get my profit targets according to what I've set. I've got my break-even triggers. And all I have to do is click. Now you can also enter the trade manually by right-clicking. And we'll see whether or not this snuggle that in there a little bit. And you'll see the same thing once the order engages. Oh, come on. They're being difficult. Okay, there we go. Once the order engages, we automatically get our profit targets and stop losses, again, according to whatever our strategies are. I've been thinking about putting the Trailblazer actually on the Hawk Scalper. just to make it a little bit easier to initiate a trade. We don't normally get left standing at the side of the road, so to speak, but occasionally, especially this last week and a half or so, some of the market activity has just been crazy. All right, let's see if we get a hard edge bounce here. That could be a saleable signal. Oh, absolutely, Frankie. Yeah, Frankie says, great presentation. Thank you very much. He says, in other rooms, sometimes there's 15 minutes and then they quit. Yeah, well, sometimes we've had those kinds of days too, but we hang in for the morning session anyway. And yeah, I've got your email here, Frankie. I will definitely be in touch with you. All right, well, now they're drifting a little bit too far. They're back inside this trading range. You see, when we're watching for that breakout, for that test and retest, we need to see them hold somewhere around this area. Otherwise, if they drift too deep, well, then the sellers really don't have control of the market anymore, do they? Yeah, that reaction, I don't know, that might be a little bit late. All right, well, you know what? Like I said, we're here in the demo room. If it breaks this low, we're going to take that hard edge bounce. So we'll see how good my reactions are. Sunkim is asking about a volatility stop. He says, I see some stop systems use a volatility stop. The ATR is essentially a volatility stop. As the volatility increases, the ATR gets a little wider. Same thing with tools like SuperTrend. I'm going to disable my stops here just for a moment because they're against the stop strategy. And I'm going to go with my stop up there. There we go. Give ourselves a chance to ride out any pending swings, and then we'll get more aggressive. Parabolics to a lesser extent are a volatility stop, but certainly things like SuperTrend, Chandelier, ATR, the percentage stop is kind of a volatility stop also. They're all more or less based on the types of ranges that the market is making. If the market is making big ranges, then you tend to get a bigger stop. That's the whole idea behind the average true range, right? You'll see sometimes, here we'll turn on the ATR. You'll see sometimes, like here, where the ATR holds and holds and holds. It's holding because of this increased volatility, right? The programming is saying, hold the stop, hold the stop, hold the stop. We don't know what's going on. The market might bounce higher. We need to hold the stop. And yeah, whenever you see a big move, like a big move here, you'll notice the ATR starts to hold. because it's anticipating the increased volatility, whereas parabolics, which is a lot more aggressive, just jams the stops right in there. And I'm going to hold my stop back here again in case we get a double pullback signal. Yeah, we're still inside this range. We haven't seen a serious breakout yet, so we're going to button up the room here in a few moments. But if you're going to be trading today, what you want is you want to let the market get outside of this range that's been established. So long as we're within this great big trading range, it's going to be tough slogging. So what you want is you want to let the market break out, retest, and then look for your buying opportunity. And same thing to the downside. You got to let it get out, retest, and then look for your selling opportunity. See, I was getting a little bit cute taking that hard edge bounce, but really until we get a proper retest, it's going to be tough. Both directions. Because quite frankly, the buyers and sellers are perfectly happy where they're at right now. So don't be surprised to see the market continue to move sideways through the rest of the session. That's entirely possible. Getting a first micro macro cross signal here now, but you see it's still right in this mix. All right, you guys, if you're trading, we didn't look too much at soybeans today. If you're trading crude oil, crude still bearish. Today it fell off a little bit lower. It's currently sitting on the primary support line. So expect a little bit of a reaction here. But it does look as though crude might be heading a little bit lower still. All right, DTS owners, I will see you in the trading room tomorrow morning, bright and early. Everyone else, thank you very much for your attendance today. I hope you found it at least a little bit entertaining. And I hope that you can join us next Wednesday for our open house session again. All right, you guys, we'll talk to you later. Bye for now.